Hello, and today is the conclusion of the 13th of July, 2011, at least as of the recording of this video. I don't want to get into any bad grammar. We'll get more into that, well, pretty much right now, because today Ron Paul was asking a few questions to Federal Reserve Chairman Ben Bernanke, and well, the video, the link, I've only seen the link that is attached to this video, which is only a minute long. And Ron Paul was asking about the gold and the value and such, and Bernanke says it reflects global uncertainties. People hold gold to protect against tail risks or very bad outcomes. Then Ron Paul says, "Do you think gold is money?" And it took about 4 seconds for Bernanke to say no. Ron Paul followed with, "Even though gold has been money for 6,000 years, somebody reversed that and eliminated that economic law." Laugh out loud, and I have laugh out loud in the cap locks because that made me laugh so much actually seeing Ron Paul laugh after that. I thought that was quite cute, quite amazing, and the overall situation of what occurred to me from just the 60 seconds I see is a positive. And then to answer that question, Ben Bernanke says, "Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money, but they're financial assets." And I'm quoting it exactly as said. Maybe I should have put a space between this "it's" and this "you" in here. But anyway, then after being asked why central banks hold this, and they then Ben this unchecked before I did this. They then Ben said it's a form of reserves, and Mr. Paul asked again, "What about diamonds?" And the obvious answer that Ben Bernanke said, "Well, it's tradition. It's just tradition." Now, if this isn't opening up your alarm bell, then I don't know. This stuff is quite obvious that the people are waking up, and when we have videos like this that will get some views, it will be talked about for a little bit, and then the next big thing will happen. And well, I've seen a little article, and I've read the first paragraph only, and the first paragraph's like a sentence or two. That's it. I don't need to read anymore. Now, if someone says, "Oh, check this part out, it's important," then I'll see it, because I'm not a big fan of this mainstream media stuff. But Moody's did say that it is small, but it's rising risk of default for the United States. They have this triple A rating, and I think what's important for me to mention is you talk about the news, and well, this is going to get talked about, and this is probably not going to be good for the dollar index, and could make precious metals rise. Now let's go on to some more charts. This is the fourth different video of the day and the final one. And I'm going to go over this chart, which I've shown a few times, pretty much since somewhere in here is when I started this particular one. And what's happened is it's gotten above the 50-day moving average. We were within that level for 3 days at it, 4 days within it, and today it broke above that level. I've put on the blog, do you think $32.32, which is this low, is the bottom? If you think it is, then vote yes. If you don't think it's the bottom and will go below it, then vote no. As far as volume today, we had some larger volume, but when you look at the size of this move and you look at the size of the volume, it's showing that it's a potential breakout. There still needs to be a confirmation that this break above the 50-day moving average is going to be for real. And not only that, but we're also now in an area where we've tested on quite a few different occasions in here at roughly this $38 to $39 range. Okay, now let's move on to the volatility. Now this is a similar type of chart that I've been showing the last few days on the quarter day, but this is a daily. It uses the exact same algorithms. Not much to say other than we need more data, and I wish I had it. I don't. However, what we do see from this is that it was coming from a major decline. The moves that happened with before this occurred in 2008 at the end were big. I do have data from 2008. That's when the moves of 20%, 10% per day were very common. We were there for a while in here, but still, this was lower than where we would have been before. However, what does this trend show? Going down, sideways. Now we can see when we connect these lows that it's looking like it wants to try reverse this to an uptrend. And it's been basically doing that through time, as the support level has went down, sideways, and then just up with this high, and that low, and all the lows. Anyway, the next one is the direction from the 50-day high and low this week. This blue line is going to crash. It's going to continue crashing tomorrow and again the next day for the rest of the week, pending, and of course, any silver price corrections. And that's because the 50-day levels where silver was at $50 are now declining. The 50-day high is going to soon be below 40, which means that it will be very easy. In fact, if silver closes this week at 40, it will make a new 50-day high if it closes at 40. Now, don't quote me on that. It might be early Monday, but it's in that close proximity, because when silver crashed, it crashed hard. And in order for me to see significant buy signals, we not only need to get out of this resistance, but really 20% from its lows and be above the blue line. Well, that part is now taken care of. It's going to be above the blue line to do this. And pretty much just getting above this really means all the other methods you need to see clear have got to be cleared. And final chart will be the gold to silver ratio. And this is the weekly chart. And within this chart, as it was starting below, it was going through its crashing cycle for the end of last year and the start of this year, as the ratio was breaking below 60, really down to about 30, losing what was over half of its value. And since that point, the big selling of silver had really one big candle that has continued sideways action. Now, if you were to eliminate candles, say from here to here, and just move this from here to here, things would look a little bit different. You'd be in a downturn and then just going sideways. But all that's happened is you've had this up move in here. Since then, it's just went through time and it's been trying to get above this Fibonacci level, which is at 42.86. It can't get there, and it's been holding above this 18-period average, and now those levels are now closing in on each other, and there's not that much downside left, as the 18-period average of lows is now crossing in above 40 to 1 ratio. Therefore, with that being said, if this Fibonacci line, 38.2%, is hit on the way up, and you go back down to this level, then you have to be a little bit careful of a decent size leg lower. The same was true with the silver market at the 38 level, and it still is. And that's why I talk about the 25-26 handle going below. What's the next significant level going below 30? Well, we have seen this without a break of this moving average lose half of its value. And I pointed out before that outside of a significant level, roughly at around, I'm trying to remember just off the top of my head, I think it's 24, 16 is the significant level, which is the historic ratio. Anyway, this will be the conclusion of this video, the fourth and the final video. Interesting when we have tradition, bank people buying gold. Traditionally.